Coming up on Market to Market, the economy sends signals that may require the Fed to tap the brakes. The House opens for business on all things USDA. Oyster farmers help restore the waters of Long Island Sound. And we have the commodity market analysis of Jeff French next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, February 16th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The check engine light keeps flashing on another economic report as we picked up new data points for prices in front of and behind the sales counter. Wholesale prices are measured with the Producer Price Index, and for January, the tracker expanded by 0.3%. The Consumer Price Index for January was up 0.3%, a tenth of a point gain over last month. The yearly snapshot was at 3.1%, which is above the Federal Reserve's target of 2%. The core CPI was 0.4% higher when the more volatile sectors were removed. Retail sales fell in January after a holiday splurge. The rate weakened 0.8%, according to the Commerce Department. And even as economic reports have kept coming, the pace of government has slowed, with few bills headed to the open debate on the House or Senate floor. The House Agriculture Committee last held a hearing with a witness in their chambers on June 21st, 2023. That's 238 days before Secretary Tom Vilsack appeared this week on Valentine's Day. Peter Tubbs looks at the back and forth in the hearing room.
Members of the House Agriculture Committee met this week and called Secretary of Agriculture Tom Vilsack to answer their questions. Animal disease and trade were common topics for the discussion.
Talk to us a little bit, Mr. Secretary, about are we getting closer to developing a vaccine solution that would not unduly harm trade so that we can have some alternative to total depop?
I'd say we were probably 18 months or so away from being able to identify a vaccine that would be effective for this particular HPAI that we're dealing with now. The problem, of course, is it mutates. And so you have to basically create ultimately a vaccine that is available for all strains, right? So there's that issue. The second issue is, how do you deliver the vaccine? Do you deliver it in a way that is efficient and effective and less expensive, or is an injection required? Well, when you're talking about hundreds of thousands of birds, that's difficult.
Is the USDA concerned about trade disputes through USMCA? Is this going to be a big issue because of Prop 12?
I will tell you that we are looking at ways in which we can help and assist the pork industry. We know it's under a lot of stress, as you do. Yeah. We recently purchased roughly $100 million of pork products in our feeding programs using the CCC and Section 32. The good news is we've seen a significant increase in pork exports, yeah. But there's obviously a lot of work still to do to try to help and assist them. I think we're going to go through a bumpy period here where farmers have to basically make a decision about whether they're going to participate in that market or whether they're going to be more localized.
How can USDA help on the free trade agreements, and how can we expand export markets?
The reality is, I have a hard time understanding the focus on trade agreements when I'm pretty confident, and maybe I'm wrong about this, but do you believe that you can pass trade promotion authority in this Congress? You haven't been able to pass a budget. You haven't gotten a farm bill through. Can you pass trade promotion authority? And if you can't, why not? And I think the reason why not is because people have an attitude about trade that requires us to rebuild people's trust in trade.
This past June, the Department announced SNAP's error rate, a rate that measured overpayments and underpayments. This announcement included an overpayment rate of 9.54%, which amounts to roughly $30 million a day. Certainly that would be an insult, Mr. Vilsack, to our taxpayers. What concrete, serious, and forward-thinking steps are on the horizon?
States basically administer the program. We are working with state governors to make sure that they understand they need to get back to a more disciplined effort in terms of SNAP. We sort of relaxed the flexibilities or created flexibilities during the pandemic. And we're now asking them to go back to the ordinary work of administering SNAP, which involves, to Representative Bishop's question, face-to-face interviews, which I think will be helpful to restore integrity in the program.
What should legislators be keeping in mind as we look to strengthen the farm safety net in the Farm Bill from your perspective, Secretary Vilsack?
Well, I think the challenge is to find the resources to strengthen the safety net without necessarily jeopardizing the capacity of nutrition assistance to do what it needs to do, and without taking resources away from conservation, which benefits a broad array of producers. I think that's the challenge, and I think there's a creative way to do that that doesn't necessarily limit SNAP and doesn't necessarily take money from the IRA. I think that's the key.
For Market to Market, I'm Peter Tubbs.
An estuary is where the tide meets the stream. One of the nation's most densely populated areas is New York City, and the area's Long Island Sound has long been polluted. The degraded water quality has led to low oxygen levels and made for a difficult place for fish and other species to survive. The 1970s brought together fishermen, lobstermen, and oyster farmers to clean up the water and keep fishing alive. John Torpy looks at how there's more than meets the eye under the surface of this project. His report is our cover story.
Submerged in brackish waters along the Connecticut coastline, newly nested oyster beds are helping restore the environment and protect generations of family tradition in New England aquaculture.
Connecticut was the cream of the crop, pun intended, for oysters, and that we want to see that come back.
Around the turn of the 20th century, oysters became a popular dietary staple for New Englanders. In Connecticut, demand for oysters was particularly high because of the nutrient-rich environments of the natural oyster beds.
So what's really unique in Connecticut are these large tracts of oyster beds that are in intertidal areas like this, but also in deep water areas.
According to the Connecticut Department of Agriculture, the steep rise in popularity for oysters led to depletion of the natural beds due to overfishing. To keep up with strong demand, oystermen began cultivating oysters and oyster seed to raise their own stocks. As the decades progressed, so did cities and towns. Expanding communities and agriculture took a toll on the water aquaculture farmers depended on for raising shellfish.
Many places, the oyster beds have really been decimated early on by overfishing, but later by development. Here in Connecticut, we've faced all of those impacts early on, but these oyster beds are large and they have been sustained by industry and protected by regulators through the years.
Tessa Getchis is an aquaculture extension specialist with the University of Connecticut Sea Grant program. Getchis works with the fishing industry and seaside communities to help establish and strengthen support for the shellfish industry while improving the environment where fishermen work. Even with local oversight and industry regulation, yields from oyster harvests have been on a steady decline, according to the Connecticut Bureau of Aquaculture. Layers of silt have covered the existing culch, prohibiting oyster larvae from setting on shells and continuing to grow into adulthood. Getchis and other colleagues established a pilot program to encourage restoration of the oyster beds as a way to clean up the environment and, at the same time, protect a way of life.
So when we started, it was just ahead of COVID, and we wanted to bring people together to talk about what is the future of the Connecticut oyster industry and also these natural habitats.
When restaurants shut down due to the COVID-19 pandemic in 2020, oyster farmers were stranded without markets or consumers. At the same time, Getchus needed boots on the ground, or more precisely, boots in the boats, to help launch the restoration plans for Connecticut oyster habitats. With boats and businesses idle, boat captains were recruited to help get rid of the silt choking the Connecticut shellfish industry.
They couldn't sell their oysters, and we were trying to come up with a plan to keep them in business. And we had these beautiful beds that needed to be restored and this fleet that was just ready to work. And so we really didn't have to convince them to get out and help us with this. They knew it was important. It's their insurance, really.
These gaps right here, that allows the shell to pass through the dredge, so we keep the shell on the bottom. Okay. This will hold the oysters in it. So we're eliminating, keeping the shell on the bottom, but we're taking the oysters up. But any other shell that the guys have that's on the bench, they're putting right back down.
Robert Nolholm is owner of Bell Shellfish and is part of the 7 generations of his family who have spent their lives harvesting clams and oysters off the coast of Connecticut.
So I love to tell this to everyone, one full-grown oyster will filter 50 gallons of water a day. Now multiply that by how many oysters are on the bottom. So the more we cultivate, the more oysters that can be produced will filter more water. That's going to increase the water quality in Long Island Sound.
This stuff we love to keep. We'll hold it, and then we'll plant it on our setting grounds. This stuff is perfect for what we need clamshell to, clamshell for.
Nolholm is an early adopter of the Shellfish Restoration Program, acknowledging benefits to the oysters and the future of his business.
So the process, and how we work is we're doing it in a way where we're not gouging the bottom or harming the bottom. We're just scraping along the top. And that's going to be enough to remove the silt. Once we get the oysters there, it's going to help the industry in a long way because they have an area where they can go catch oysters to plant on their own grounds and put into the market. So the small industry guys that are able to do it, they're going to benefit from it years from now.
Nolholm's passion for shellfishing has deep roots. He relies on a long-established family history and personal experience, helping to keep the industry alive for future generations.
Because my grandfather is still my teacher, and he is still going to teach me until he decides to retire, which I don't see coming anytime soon. His idea is to get this natural bed cleaned up, get it cultivated and the silt removed, and that way more oysters can grow, because that's what he wants to see.
For Market to Market, I'm John Torpy.
Next, the Market to Market report.
USDA's Outlook Forum provided a bearish view on demand and also sees U.S. farmers planting fewer corn and wheat acres. For the week, the nearby wheat contract lost 36 cents, while March corn fell 13 cents. USDA predicts more acres planted with soybeans and also weaker export demand. The March contract declined 11 cents and March meal fell $1.20 per ton. March cotton expanded by $2.11 per hundredweight. Over in the dairy parlor, March Class 3 milk futures fell 13 cents. The livestock market was higher. April cattle added 82 cents. March feeders strengthened 388, and the April lean hog contract improved 408. In the currency markets, U.S. dollar index increased by 24 ticks. March crude oil expanded by $2.41 per barrel. COMEX gold shed $11.60 per ounce. And the Goldman Sachs Commodity Index lost more than 4 points to settle at 555.25. Joining us now, regular market analyst Jeff French. Hi, Jeff.
Hi, Paul. Great to be here.
Keep that smile because you have to smile through all of the wheat commentary right now. It is, as I wrote in italics here to emphasize, weakest on the block. Do you disagree?
Well, it's, right there, the Kansas City wheat 4-year lows. I mean, you can say that with the corn as well, but yeah, pretty steady trend of lower lows and lower highs. I mean, it's a pretty dismal trade right now. One positive is we were able to hold 550. I think that's a big psychological number in there, but there's a couple factors. You had the U.S. dollar make 4-month highs here this week. That's going to limit our exports moving forward. And then news out of Russia, Black Sea, they're predicting potentially a record wheat crop in Russia, as well as record exports.
And a cheap product that they keep putting onto the market.
Not only Russia, but also French Matif wheat is cheaper than our product right now, and that looks to continue. So, you know, you got the funds, you have the money flow, and funds right now are pressing the short side. They are nearly record short corn and beans. They have plenty of ammunition, selling ammunition to add on to this wheat.
Ryan in South Dakota asked a question that I was going to ask in Plus, but I'll just use it right now. He asks, every week you analysts predict that wheat has found its bottom. Do you think this week it actually has?
I'd like to say it has, but I just don't see that catalyst to shake the funds loose. And that's what you're going to need. And it's just the wrong time of year. Right now, the wheat looks excellent. The winter was good. There's been moisture. I was on the road down in Southern Illinois last week. The wheat looks really good. So we need to get into the actual growing season to get that trigger so the funds buy back those short positions.
In corn, the Ag Outlook Forum expects 91 million acres, down 3.6, but carry out still really high. That's not a good recipe for corn. Does anything to improve that formula?
2.5 billion bushel carry out is what they're predicting on 91 million acres. So that's a trend line yield of 181 bushels to the acre nationally. You know, the trade actually thought the yield could have been a little higher. I mean, last year, on a very dry year, we produced 177 bushels to the acre. So, you know, you can play with those numbers. You can tweak them. You can bring it down to, you know, a 180 yield. You bring down, you know, 200 to 300 million bushels of that carryout. But, you know, a 2 billion bushel carryout is burdensome. And we've had it in the past. And every time we've had it, we've had the corn futures in that 375 to 4.25 area.
If you look at that deferred contract in December, as we put the trend line up here on the screen here in a moment, you will see that is like everything else. But is there a point that a producer has to say, I just better take this now before it could get worse?
So we don't advise of selling the cash into a market like this. We will buy put options to stop the bleeding, to give you a price floor. But absolutely, I mean, you look at it at, you know, 457, 456 here. You know, if this thing turns into a bear market, and many people are suggesting that, I mean, you got to go back 4 years ago when the contract lows of December 24 corn were scored, and that's $3.95 a bushel. So if this is a true bear market, that contract low has a big target on its back.
Is the story different at all in soybeans?
Yes, right now it's all about the Brazilian harvest. And right now the beans are in that 1150, 1160, 1170 area. And historically, in the last 20 years, beans just don't trade in the 11s very often. You know, they're there very few times, and it's either from 10 up to 12 very quickly, or from 12 down to 10 very quickly. So with Brazil only 25% harvested right now, I think there could be potentially some more harvest pressure. Now we are $2.50 off the highs, so I mean, you know, for us to call a bottom, you know, maybe here at 1150, you know, possibly. But with the harvest pressure coming from Brazil, lower prices certainly shouldn't surprise anybody right now.
Ted Seifert sat there last week and said the concern that he has about soybeans is China not buying even from Brazil, let alone the United States. Do you have that same concern?
Brazilian basis has fallen out of bed. I mean, it's right now the bean basis down in Brazil is at a 5-year low. And we watch those flash sales as analysts every day. You know, we follow those very closely. We haven't seen a bean flash sale for over 2 weeks. So yes, the big gorilla in the room has gone kind of silent here right now, and they have been very quiet on the buying front.
Is it going to take them getting back in, the big gorilla getting back into the market, to make any change?
You know, from a demand side, yes. I mean, demand domestically here in the U.S. remains very strong for beans. But then we got to get into the growing season. We got to be able to get this planted. You know, they're saying 87.5 million acres. You know, I won't weigh on that quite yet, but we'll see come this spring, because I could see maybe a little heavier little heavier corn acres, maybe a little lower bean acres.
There was a thought about all of the big three that we've just talked about, the very slow Monday, Tuesday, Wednesday, whether that was ahead of USDA news. But do you get the sense that we are going to be almost the same type of minimal trading between now and the next big USDA report at the end of March?
Well, unless it comes from the outside markets, but it's just been a grind lower. I mean, the volume is very subdued. I mean, we're running, 60 to 70% of normal volume. And it's just kind of a trickle lower. And my fear now here, you got March corn at 415, 416. Why don't they want to press this thing and maybe get a 3 in front of this? That's what I was saying. But next week, we do have March option expiration. There are a lot of puts that are deep in the money. So that market, we could see a rally on option expiration very easily next Friday. But overall, the trend remains lower right now.
We'll get into some of those specific questions in our Market Plus. We have a few good ones for you. But I want to start with one that came from Kennedy Farms in Oklahoma. Thank you for submitting that via Facebook and X, or formerly known as Twitter. We ask each week. But this is the question for you, Jeff. Is there enough beef in the country to give the corn growers an option to walk their corn to market, or are beef prices too high for even that to be an option?
Yeah, high cattle, cheap corn. I mean, it's usually cheap corn, cheap cattle, and it's the exact opposite. Are they able to walk the corn off? Certainly a little bit. But we are at the lowest herd since 1957. Now, the cattle these days are twice as big as the cattle back then. But yeah, it will help. But no, we have a burdensome amount of corn here that we'd need a lot more cattle to walk the corn off the farm.
Looking at that cattle chart as it does trend higher, there's always that temptation to say the high is in, or is this just a pause to go higher? Earlier this week on our MTOM podcast, we talked to Darrell Peel down at Oklahoma State. He thinks this thing has a whole lot more upside to it. Do you concur?
If you would have talked to me earlier this week, it looked like we were kind of rolling over, and then we get into Friday and we hit up to 3.5, 4 month highs. So the market is very strong right now. We've been here before, and I've just had many conversations with my guys that, whenever we get close to 270 feeders or 190 fat cattle, put on some protection. Is that LRP or is that put options? Selling some calls up here, because this market can change fast, and we've all been through the October, November time period where we didn't think it would ever find the bottom. So these are fantastic prices, and the margins are so thin. I mean, this is big business now with these cattle prices. So you definitely need to be looking for some protection here.
I also asked Dr. Peel about feeders, and I said, did we miss the chance to buy, buy at the top, the worst thing possible? He says, no. He also sees feeder going higher because there's fewer of them. Again, do you concur? We have a cattle on feed coming next week. Any insight on where that might be headed?
The feeder cattle have been led by the cash market, and the cash market has been absolutely on fire. So I don't know if these guys that are buying these cattle, high-priced calves, what they're seeing out in the future, but they're betting on higher prices for sure on the fat cattle side. So again, the market looks strong. It can change for no reason. We've seen it before. We've lived it before not too long ago. These are fantastic prices and a lot of risk on the table.
Lately, we've not been able to end on a positive note because we always end with hogs. This week was different. Why?
Absolute massive export sales, 71,000 metric tons. Put it in perspective, that's 150% more than the same week last year. So, 30,000 metric tons a week is really strong. To double that up this week was big time demand. The futures have reflected that. Now you look at the summer months up there right below $100. If we can bust through that, I think this thing can run another probably $7 to $8. But if the first couple of days next week, if we're not able to get through that $100 mark, that's not a real good sign, because that's 4, 5, 6 days of not being able to get through that resistance.
100. So that's a heck of a rally coming up here. Do you think that's
the summer months?
Okay,
so July, June,
sorry,
July.
I'm only looking at the nearby.
They're 98, 99 cents.
Okay, sorry, I didn't have that one in my head as much. So I guess I'll quickly ask the question about the soybean issue. Has China come back in to buy any hogs to influence this as well?
They were the number 2 buyer this week. Mexico continues to be the very strong number 1 buyer, but China's there every week. They typically alternate, but this week they were number 2, so that's definitely good to see.
In the final seconds, is there one commodity that we have talked about tonight that you have optimism for in the next month?
Well, when you look at, we're down here at 4-year lows on corn and wheat, so I'm not going out on too big of a limb to say that there definitely could be some upside. And they've just, everybody's bearish out there, So, I mean, it's leaning heavily to the one side. So we could definitely see a short cover rally. The wheat could be the most explosive, I think.
All right, Jeff. Thank you very much. Jeff French, everybody. Thank you.
Thanks for having me.
All right. Hold on, because we're going to keep going with Jeff in our analysis and continue our discussion in the market segment we call Market Plus. You can find both analysis and plus on our website of markettomarket.org. We are again approaching a milestone on our YouTube page, and it is because of you. Now we are asking those of you who've yet to subscribe to our feed to do so now. Head to youtube.com/markettomarket to be the first to know when our content is ready for you. Next week, we look at those taking an experiment in cover crops to the next level. Thank you for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because a pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.